Hello, mates and folks, and welcome to episode one of our real estate wealth show. I'm the co founder of Khizer Co and VU Real Estate, a buyer's advocacy and property strategy firm, and I will be your guide on this wild ride. In this premiere, we are laying the groundwork for our grand plan to build wealth through property, and doing it with a good dose of humor and high energy. We will have regular episodes. We are ambitious or a bit mad, probably both. That form an evolving saga, unfolding week by week with new ideas as we go. Our strategy isn't a one hit wonder, it's a journey that adapts and grows over time. Now, this isn't your dry, stuffy finance lecture. No way. I'm bringing the Aussie perspective, plenty of sarcasm to the mix. As we all know, we Aussies from different walks of life use humor, even in serious business chats. So expect cheeky comments and the occasional wisecrack. Our humor can be a little colorful. You know, folks, what I'm talking about with the you. Thank you. We know not every American joke lands down under. For example, Americans might earnestly say, they are rooting for us. They are rooting for you. Deadpan sauce. But in Australia, you know it. That means something very different. Let's stick with barracking for you. You're very welcome. Don't worry, I'm not leaving everyone out. We will also mix it up a dash of British wit, a sprinkle of American can do optimism, and even a pinch of global spice from the many cultures that call Australia home, like myself. Think of it as a comedy stew, one that hopefully doesn't boil over. By the way, Americans tend not to value subtle sarcastic humor as much as we do. In the US, it's more about being big, bold, and overt with jokes. Here in Oz, we think, well, we can take the Mickey, quick wit, self depreciation, and cheeky shots at our mates. The point is, whether you are Aussie born or soon to be Aussie from abroad, we have got a little something for everyone in the humor department. Before we dive into the property specific, a quick peek behind the curtain. We have sketched out a blueprint for the wealth building strategy. Fancy word for big plan document. Don't worry, I won't read it line for line. I would rather wrestle a saltwater crocodile. Instead, I will break it down into full sized, practical pieces. Sometimes I think, like, I don't know, just hearing a lot of different accents. For some reason, I also do different accents too, didn't I? By the way, I'm bilingual. Why we need a plan? Yes, even for property. You might be thinking, do I really need a strategy to invest in property? Can't I just wing it and buy a house somewhere I like? Sure, of course, you could fly by the seat of your pants if you wanted to join the statistics of those who crash and burn. All the new startups feel the pressure. About 60% of the businesses in Australia fail within their first 3 years. 20% flame out in the first year. Ouch. Yikes. Big reason so many ventures go belly up is lack of planning and poor management. In fact, a study of Aussie CEOs found that 25% of the business failures were due to lack of leadership and planning. In plain words, if you don't plan, you plan to fail. And failing means no profits, no financial freedoms, and potentially having to slink back to your day job or move in with your parents. Hey, nobody wants that. Now, property investing isn't exactly the same as running a startup, but the principles actually holds. Buying real estate without a plan, no research, no strategy for how you will make money is like driving into the outback with no GPS. You might be asking the Joey, hey, where do I need to go? You might get where you want to go, or you might end up lost with a flat tire and Wi Fi. Not ideal, is it? A strategy, whereas, gives us direction and way to measure success. Or now, at least, when to yell abort, and pivot if needed. Plus, having a clear plan means we can get creative and stay on track. Kind of like knowing the rules of a game so you can cleverly bend it. Bottom line, yes, we need a strategy for property and wealth building. It will be our game plan, our roadmap, our trusted GPS through the wild terrain of the outback. Now, with a solid foundation, we can confidently build our portfolio step by step. Don't worry, we will keep it fun and flexible. As an Aussie might say, she will be alright, but only after we do the homework and put a plan in place. Australian property market snapshot, mid 2025. I'd like to actually highlight some of the aspects to build wealth through property. You need to understand the lay of the land. Let's take a quick high energy snapshot of Australian real estate market as a mid of 2025 with the latest data and a few jokes which I might like to crack so you don't feel bored or anything. Prices are record high. Australian home prices have come roaring back, hitting new record high nationally. Values have risen for 6 months straight. In July alone, prices climbed about 0.6% on average. Every capital city saw growth, yes, even Perth, which often naps through booms. Some cities are really surging. Adelaide lead with nearly 0.9% growth in July, while Darwin jumped 2.2% in 1 month. Darwin apparently had its Weet-Bix leading the pack. In Australia's most affordable capital, so investors are flocking there for both short-term growth and solid rent returns. Median home value is around 844,000, which is up 3.7% from a year ago. In plain English, property values are not just high, they are highest ever. Interest rates and buyers' sentiments, the Reserve Bank RBA pulled a sneaky move in early July, as you would have seen, by holding its cash rate at 3.85% when many expected a cut. That pause was a surprise, the kind that made borrowers breathe a sigh for relief. With inflation easing now, a rate cut is widely expected in the upcoming weeks. And historically, when interest rates go down, house prices tend to go up. Cheaper money equals more buying power. There are a few exceptions like during the 90s recession and the GFC, but generally lower rates are rocket fuel for prices. Even the prospect of lower rates has buyers feeling upbeat. Agent report more bidders at auction and a high sense of urgency among house hunters. However, and it's a big however, affordability is the killjoy. Years of prices growth means the typical house cost over double what it did relative to income 20-ish years ago. In post-war decades, it was 2 to 3 times for annual income to buy a home. Today, it's like 6 to 10 times. I just wanted to pinch myself and say, ouch. In fact, since 2012, property prices nationally have risen 82%, with household income rose only 30%. No wonder new buyers feel like they are chasing a moving train. High prices and higher mortgage repayments after last year's rate rise are keeping many first times on the sidelines. I might have a great product which I will disclose probably in the next episodes for those who are still sitting on the sidelines. Let's talk about demand versus supply, a tug of a war. We're seeing a classic supply-demand mismatch, folks. It's a mismatch. On the supply side, listings are super low. There's a dwindling pool of homes for sale, especially good ones. On the demand side, buyers are out in the force, beyond by the market's upward swing and rate optimism. This combo is pushing competition through the roof. It's not unusual right now to see dozens of eager Aussies packed into a suburban auction, all fighting over one property. One property like seagulls over chips. In blue chip suburbs, almost feels like boom time. A grade properties are attracting frenzy bidding war, but it's not uniformly crazy everywhere. The market's a bit mixed. Higher prices and economic uncertainty are forcing some buyers to be cautious or selective. Homes that aren't perfect, think, on a busy road or in a need of renovation might sit unsold longer since buyers are gravitating to the cream of the crop. Notably, a lot of the purchasing heat is coming from upgraders and existing owners with cash or equity to spend. Many first time home buyers and investors have pulled back in the priciest market. Can't blame them with entry prices so high. In other words, the people driving up prices now are often those who already have properties. They have seen their own home values soar and are trading up or investing further. It helps when your Brisbane house jumped nearly 100% in value since 2020. True stat. Brisbane prices are roughly double what they were 5 years ago, giving some owners a sweet equity boost to play with. Hotspots and growth area for savvy investors are increasingly looking beyond Sydney and Melbourne for better value. The action has been strong in smaller capitals like Adelaide, Brisbane, and Perth, which offer lower entry prices and still have plenty of upside. Adelaide, for instance, have been outperforming some bigger cities to everyone's surprise. It just keep growing. Perth, I spent so much time in Perth, is attracting eastern status, hunting for bargains and strong rental yield. And Darwin, remember, Darwin with the 2.2% monthly jump remains a magnet for yield chasers and those betting on its growth potential. These areas combine affordability with high demand, which is kind of the magic recipe. The numbers tell the tale. National population growth is around 450,000 people per year. I'm even ghosted by the numbers, aren't I? All those people have to live somewhere. And if they can't afford Sydney, you can bet many will turn to Brisbane, Adelaide, Perth, etc. Investors have caught on there's a flow of money going into these new tier cities. In fact, interstate buyers have been flocking to places like Adelaide and Perth because they see better value and growth prospects there. And if you were lucky or smart enough to buy in Brisbane, circa 2019 to 2020, your property might be worth nearly double today. Check the stats. That's the kind of wealth boost that makes you do a little happy dance. Or at least shout, you made a bid. Rentals and yields, landlords, selling records, rental market currently is tight-netted, insanely tight. Vacancy rates are at historic lows, often under 1% in many cities. That basically means virtually every rental is getting snapped up. Tenants are bidding hard and rents are soaring. Welcome to the lucky country. For property investors, this translates to strong rental yield, the rent to return relative to property prices. For example, properties in Darwin currently offer around 6% gross rental yield, and cities like Brisbane, Perth, and Adelaide are seeing roughly 4% yield on average. Those are healthy numbers, especially after a period where yields were thinner. High rents help cover your mortgage, positive cash flow. Thanks, renters, which improves cash flow even as interest rates had risen last year. It's a bit of a silver lining. While first-home buyers struggle with affordability, investors are benefiting from record rents. No one is celebrating a rental crisis, but if you own a rental, it's providing steady income. In fact, Darwin's combo of low prices plus high rents is giving some investors total return, growth plus rent, north of 20% annually recently. This is the stats. Not too shabby, hey. That's the sort of double-digit return that can accelerate your wealth building timeline. Bottom line, folks, as of mid of 2025, Australia's property market has plenty of momentum. Prices are rising and even breaking records again, fueled by limited supply and solid demand. You can even check what government is actually prescribing. The RBA on hold for now, with low possible rate cuts looming just around the corner, which has injected optimism. Yet we can't ignore the challenges. Affordability is a real estate is a real issue, and the market's not a free for all. This snapshot sets the stage for why property, despite some hurdles, is still the go-to asset class for building wealth in Australia.